So we were able to own that team at the time at a very good price. But at the time, we didn't know that teams were going to be worth 8 and 10 billion. Now we had a view of media, of the sport, of being one of 32 was a privileged position. But paying 2.275 billion, it was not obvious that that was exactly the right thing to do on that day where Dave and I shook hands with Jerry Richardson.
Welcome back to Portfolio Players, presented by E-Trade from Morgan Stanley. I'm Dan Roberts here at FOS in New York, and today I've got Jeffrey Kaplan, the founding partner of Andalusian. Jeff, thanks for coming in.
Good to see you, Dan.
So you guys have a lot going on at Andalusian. There's different parts of the business, and a huge part that certainly interests me is the advisory group, where you have worked on some very, very notable team sales. So I want to get into that. Let's kind of go deal by deal. But before I do, I think a good way to set the stage, and we were talking about this a little off camera, right now something is happening with people buying stakes in sports teams. I think I've asked most of our guests this on this series. Of course, it's not like it wasn't always a great investment to own a piece of a sports team. Everyone knew that. And yet, in the last 2 or 3 years, an obvious flood, an acceleration of the trend, especially with athletes and celebrities wanting to buy into teams. So you are obviously at the center of this. What's going on?
Yes, I am at the center of it. And for a long time, Dan, it's always been an attractive place to invest, a great place. Now it is more great because today sports drives media. It's really the only sort of live content to drive media across the globe. Media has grown from broadcast, cable, satellite, now streaming. So media has continued to grow. Sports, which used to be just sports and is now an asset class, we call it an asset class, has grown with the success of media. And concurrent with that, sports has invited the world of institutional capital into what was a very private world of largely family ownership. So if you look at the tailwinds of the sports business, besides media driving the growth in sports globally, besides the evolution of the capital markets coming to sports, it's really introduced the possibility of investing in sports franchises. It's almost democratized it because now we have funds that specifically look at sports investing that are more accessible to individuals and high net worth investors. So it's a great time to be in the sports business.
Now, the irony of saying that media has driven this is that media has also become extremely messy. I mean, more fragmented than ever. Look, whatever example you want, it's beyond just cord cutting. I mean, I remember 15 years ago, it was all about, cord cutting is accelerating and is ESPN in trouble? And every year, news sites would write the same story about, here's how many cable subscribers ESPN lost this year. I always thought that was a little silly. Now it's about ESPN Plus and flagship, and every network is also a streamer, but then the big tech giants are in the room, and they're bidding on games, and the NFL is really breaking up its rights. They're parceling out some games to Amazon, some games to Netflix now. Will Apple get in the mix? So, it's interesting that you say sports has become more desirable because of media, because also there's a lot more to navigate, and media is also in some ways, I don't want to say in trouble, but it is rapidly, dramatically changing. Some things that people thought were a sure bet a couple decades ago are not.
Media has definitely evolved and transformed. But for the content providers, for the leagues, it has largely grown its audience. It has gone from national to international. Our 4 major league sports are now global. Soccer has been global. Many other sports have become global. And Dan, I'm a believer in the markets. And the markets affirm for me that there's more value in content because the NBA just negotiated its 10-year deal at 2.5 times its prior. The NFL had a $110 billion 10-year media deal that has a 29 opt-out, and that's going to grow. So the evidence is in the fact that with more players, with more ultimate users, viewers, and more content for each of these different categories of streaming and broadcast and satellite and whatnot, it's telling me that the pie is growing, that there's more value in it, and that the media will continue to bring value to the content provider. So is it forever? Will it grow at the rates that it has appreciated in the past number of years? Time will tell. The NFL and the NBA have demonstrated recently that media deals will grow meaningfully, dollars and growth rates. MLB has to renegotiate a deal now as ESPN has walked away, and they're going through the process of how do I stream? How do I replace RSNs? They've been in decline. So when you look at Major League Soccer, they're figuring out they're in an Apple deal. How do we get more eyeballs on MLS soccer in competition with the EPL and everything else in the world? So for the best content, the best media providers are paying more value.
Yep, and good to be in business with those big leagues, obviously,
Yes.
or have a piece. I really appreciate that you said, it used to just be as simple as family owned. Teams were owned by one family, and the family would own it for decades, and then they'd sell kind of whole hog to another family. And when you look around the big leagues, it's still the case that in almost all of the teams, there's a couple of MLB examples where it really is more a company, but there's a face of the team. With the Celtics sale even that was just reported, there has to be a face, and it's Bill Chisholm. There's a lot of PE in there. The shift that we're seeing is selling off more stakes, and as you said, institutional capital coming in. The NFL just this year opened its doors to PE, up to 10% ownership. The other leagues had allowed that already. Any downside for the fans or for anyone involved, this flood of new institutional capital? I mean, if you're a fan of an NFL team and the team sells 10% to a PE firm, what do you care, right?
You shouldn't care. In fact, you should be pleased that as a fan, the enterprise that you love so much, the team that you embrace, the New York Giants selling 10% to an individual other than the Maras or the Tisches, or to an institution, only reinforces the strength of the enterprise. You can bring in capital to sell to owners, to sell to generation 3 and 4, to do succession planning, tax planning. You could also bring in capital to build a great new stadium or build out a practice facility for your team. So the capital that used to be constrained by families who, as legacy owners, could not necessarily put that type of capital into teams that are now worth $8 and $10 and $12 billion. We now have an outlet where capital is available to continue to drive the growth in the NFL, in the NBA. Roger Goodell, Adam Silver, Gary Bettman, Rob Manfred, they're very happy with the availability of capital to support investment in their league, whether it's to owners or to the teams or to the building of stadiums or practice facilities. It really is investing in the whole ecosystem, and it's uniquely well-timed in a business that had been so closed to investment. Think of capital markets and in business, it's been for forever, right? Public markets, private markets, debt markets, equity markets. But team ownership, very closed system now, and opening families to investors has really been a watershed for the better. Fans, either they don't have to know about it or they should be happy with it if they do know about it.
Got it. Let's drill down with the Andalusian Sports Advisory Group and the deals that you've advised. You were previously at Appaloosa, which of course is David Tepper's firm, and now at Andalusian. The first deal that you really advised on, what kind of started it all for you in this current era, was the sale of the Panthers to Tepper. Is that fair to say? Talk about that origin story.
That is fair to say. Origin story is Jeff Kaplan was just a lonely 25-year M&A banker who ran global M&A for Merrill and B of A, where the sports business was this big, because we were chasing corporate business and the asset class hadn't evolved and the size of the teams and the businesses wasn't as great. But I used to work on those deals episodically. When I came to work for Dave as his COO, he was a 10% owner of the Pittsburgh Steelers, because he's a Pittsburgh guy. And the aspiration was to buy the Pittsburgh Steelers. And I failed to do that. So we took a left turn.
It's a hard family to unseat, though.
The Rooneys belong as the owners of the Pittsburgh Steelers forever. Relationship with Dave and the Rooneys ourselves is great, and we admire that franchise immensely. At the same time, Allen & Company was selling the Carolina Panthers, and I suggested to Dave that we take a look. It's an NFL franchise.
It was only 32,
It was only a $2 billion franchise. Really, they were trying to sell it for $3 billion, and because I'm such an equipped M&A guy and Dave's such a disciplined investor, the 3 became 2.2, 2.3. So we were able to own that team at the time at a very good price. But at the time we didn't know that teams were going to be worth 8 and 10 billion. Now we had a view of media, of the sport, of being one of 32 was a privileged position. But paying 2.275 billion, it was not obvious that that was exactly the right thing to do on that day where Dave and I shook hands with Jerry Richardson. Now it turned out that 2.275 billion, any NFL team today, I would say, is 7 billion plus. So we're in rarefied air. Why are they 7 billion plus? 2 things. The media, we talked about it, and the hard cap, cost of goods sold. I know my labor costs. NFL headquarters, 345 Park, they send you the dividend. It's the media less the hard cap. And you know what an NFL team makes before you get to your local business, which is, I run the stadium, I run my promotion partners, I run the suites.
You better have the stadium, and you better have the real estate around the game.
So anyway, getting back to the origin story, Dave has been very happy with his ownership of the Panthers. We invested well in terms of timing, and the future of that franchise, we think, continues to be great.
So it's interesting that you talk about Tepper originally with the Steelers and being a Pittsburgh guy, because of course there's no personal connection to the Panthers, and that's fine. But I mean, that does go back to our point about the shift we're seeing. In other words, it used to be that a family would own the team, maybe not always, but often where the buyer had grown up. Bob Kraft, Massachusetts guy, right? Like there was a real connection there. Now, of course, if you are successful in business and have the means to buy a team, it's not so easy to just go ahead and buy the team you want. Gary Vaynerchuk would love to buy the Jets, right? But they may not be selling, or he may not be able to afford. I'm sure Bill Simmons would love to own the Celtics. So with all that said, I mean, Josh Harris has been an interesting example, because you've got the Commanders over in DC, and then you've got the Sixers in Philadelphia. So now we're also seeing a phenomenon where if you can own multiple teams, well, they might be in completely different cities that kind of have no relationship to each other. And do you think there's any kind of effect on fans? Do you think fans care much about, does my team owner really have a connection to the city?
Yes, read the Philadelphia Press. I'm a Philly guy. I'm an Eagles fan, but I'm also a Josh Harris fan, because I work closely with Josh in the pursuit of the Denver Broncos, and we wisely decided not to outbid the Waltons on the Broncos, shifted to the Commanders. Josh happens to be a Washington, D.C. kid. That's where he grew up. That really is in his heart. That was his dream. And it was fortunate that Josh had the wherewithal, with a great team, with a commitment of capital, with a lot of passion, with a strong syndicate, with an excellent advisor to help own that team at $6 billion. He does tread lightly in Philly and DC. There is that fan conflict. There's no business conflict, and I think he manages it very well. But I'll get back to your first point. This was a business with the Steelers. Everything was local. Dave had to sell his stake in the Steelers to complete ownership of the Panthers. What do you do? Well, let's find the rich guys in Pittsburgh. It's like, no, it's not that anymore. Let's find high net worth people across the nation, across the globe, who have an interest in the NFL, because this now spans geography. You cannot find all of the people in Pittsburgh, all the people in Nashville, to buy. What was the last team for sale? It was like Buffalo, Panthers. Dave was not from Charlotte. Josh happened to grow up in Washington. But geographic limitations, there are really no boundaries to sports investing now. So when we're looking for LPs in the Eagles process, in the Bills process, I worked with Dean Spanos and the Chargers in that process. It's not always the case that they will be resident in that geography. So that's sort of the nature of the business growing and capital flows growing and supporting valuations and interest. Even though Bill Chisholm is ultimately, a Celtics guy, the interest in that team was national and international, and we're seeing more and more of that.
I mentioned the Commanders, and that's another deal that you advised on, as you said. I mean, $6 billion. And that was quite a process, it seems to me, at least judging from the public. I mean, sometimes these teams just suddenly sell, and sometimes it's more like everyone knows they're up for sale. Drips and drabs are coming out. I mean, Jeff Bezos was in the mix with that. Tell us a little bit more from behind the scenes with the Commanders selling. I mean, at $6 billion, it almost ironically seemed like both, I mean, it was a record, but it almost seemed like a bargain as well. I mean, as you just said, any NFL team has got to be worth $7 billion or more at this point.
We would say Josh is in the money right now. So I would say that was good value at which he bought it. He had the vision for it when he undertook it. We knew that $6 billion was Dan Snyder's asking price. It was a formally organized auction process, so there were multiple bidders. So you had the strategy of valuing the team, building a capital base and syndicating to buy the team, and then competing with others at the same time. And it was a blind auction. And Jeff Bezos was always lurking in the headlines. We don't know if he was lurking, but
right.
he was,
I still don't know
always
if
in the
that was,
headlines.
yeah.
So
he was just the stalking horse, it seemed like.
A little bit. I think Dan did not prefer to sell it to Jeff Bezos. I think he preferred to sell it to Josh. But ultimately, it was maximization of value for his family and his estate, understandably, and we were the best buyer at the best price. You kind of have to be both these days, because in team ownership, 32 NFL owners, 30 NBA, the seller gets to choose to whom he or she is selling.
Not like when you sell a house, blind.
If you sell a house to someone who will be your neighbor, if you're staying in the neighborhood, then it matters. If you're just selling and leaving town, then it's something different. There are legacy issues to team ownership. I think it would be a rarity for a team owner who's been in position, they're largely owners for 10 years plus, depending on the league and the family, to not care about in whose hands the legacy will be placed. So that matters, and top dollar matters. So Josh played it exceptionally well. It was a challenging process because it was playing out in the press. Not because of the buyers, but probably more because sellers like to create auction interest and intrigue and competitive tension and uncertainty.
Yep. And someone's out there leaking to people like me,
So
I hope.
People will leak. Bankers on the sell side leak. Bankers on the buy side usually less so. That's the rule of the jungle. And Josh was savvy and committed, well capitalized, had a great team around him, and with that franchise, he will now build a world-class stadium, hopefully RFK, and that will be one of the great investments and ownerships in the world.
You said something about 10 years. You're doing my job for me, because I was going to ask whether, as part of the shift we're seeing with more people getting into ownership, and also with it not always being families or not always people who have local roots, I mean, I'm sure we could run the numbers on this and it would probably make a cool chart. But do you expect that we'll also see primary owners holding on to teams for a shorter period of time? Now, of course, owning a piece of a team is a longer-term investment. We can talk about short-term and tech later on, but probably, at least I expect, we won't see 40 years of ownership handed down from family member to family member as much in the future.
I think you're right, although I think when owners take the seat, they don't envision leaving the seat. It's a very compelling, privileged position in the world, but it's a business, and it's challenging. And Josh wakes up every day, and Dave wakes up every day with challenges with his organization, his personnel, his, municipal financing support, with international games and investing in flag football. There's many different challenges. It's a business. Bob Kraft's done it exceptionally well. Jerry Jones has done it better than anyone. I would say that there will be more alternatives to sell and recapitalize teams than there have been in the past. But I think there's two countervailing forces. Asset values are very high. Think about how many people can buy a team for 8 to 10 billion. Do the math. In the NFL, you have to be a 30% owner to start. You get $1.5 billion of debt, and you have to write a check for $2.5, $3 billion. You have to own a team, You have to be very high net worth. You have to be very liquid.
Yep. Be ready to spend more immediately.
Spend more immediately and build a giant syndicate of investors where people are coming in for 200 million to have no say.
Right.
So number one, the commissioners are thinking about that. Like how do I ensure that I continue to have appreciation in my franchises, especially at these increasing numbers. And then number two, I think what institutional capital is really doing, it's allowing legacy owners to stay in teams forever. It's perpetuating continuation of ownership, because if I'm a legacy family, you think about McCaskey or Ford or Rooney, now that's NFL, and you have similarly legacy owners in all sports, and they typically started with families. It used to be that generation 3 is like, great, I own 1% of a team, but it doesn't do enough for me. I don't get dividends, I don't get money, I can't monetize it. So generation 3 is usually a tipping point, and we're a G4 in some of these teams. And when you have founders that pass, when ownership ends up in estates, you have tax issues, you have succession issues, you have liquidity issues for taxes. And what private capital is now doing, it solves a lot of it. If you're a $10 billion team, Giants, whatever they might be, I'm not ascribing that value to them, but let's say they're a highly valued team. You can sell $1 billion for 10%. That solves a lot for a lot of years.
Yeah.
And guess what it doesn't change? It doesn't change anything that Tish and Maris do about owning the team.
You're still the face.
You're still the principal owner, you're still the face, you've solved your succession and generational issues, you've taken out liquidity. So private equity is actually likely to perpetuate longer ownership, particularly with legacy families.
You talk about the valuations going up, and of course, most recently we've already flicked to this a little bit. The Celtics and this reported $6 billion. I've heard elsewhere it's actually higher, or will end up being higher than 6. I was on a panel in London, and a banker said we might see that this will prove to be the high watermark of these valuations. What do you make of that, and what do you make of the numbers on the Celtics? Because if that's $6 billion, I mean, it's like you said with the NFL. I mean, is the sky the limit with these price tags?
I think everyone is quoted as saying this is the high water mark, and they're never right. We were the high water mark at $2.275 billion. It's the most expensive franchise in the world, and it's like, poof, here we are today. And we never saw it as the high water mark. We worried that it might be the high water mark, but I'll go with media and global growth and the things that continue to drive the success of these leagues. So I don't think we're at a high water mark today at all. I think everyone should be cautious about, if the NFL grows at 12%, 15% compounded for a number of years, it doesn't mean it will grow at that rate forever.
Right.
So it could be slowing appreciation, but I don't think high water mark usually tends to describe then a crash thereafter. So none of that here. With regard to the Celtics, I put them in sort of the pantheon of, yes, they're an NBA team, right? So they get comped to their peers, and Phoenix was $4 billion, and now this is 50% higher. Because this is iconic.
Yes,
Celtics,
I'm from Boston. I don't know if we talked about this, so I'm a little biased here. But.
So that's okay. The Celtics, I would put them in the category of the Yankees and the Cowboys and Manchester United, and they're an iconic global brand. Now, 2 points you made. One is there is a front end and a back end to the deal. The front end is at 6. The back end is actually somewhat incentive based on the growth of the NBA. So that back end could be as high as 7. So that's true. So the all-in price of that will be higher than 6. And with a team like that, they don't have the hard cap issue of the NFL. So you have a luxury tax, and the NBA is managing well towards making that a little bit more restrictive. So the Celtics uniquely are as good a team in the world of basketball, both last year and this year.
Right. Well, and they're selling at the right time also.
And they have, you can read its popular press, a very high payroll. Mm-hmm. And payroll is probably the issue that either creates unique profitability or constrains profitability. So ownership can take a view. The other thing in the NBA is that profitability is very much tethered to stadium economics. Boston Garden, you love it, you grew up there. It is probably not the best economic outcome for a team owner. Like if you're in Golden State, that's a great economic model. When you build a new stadium, as Josh will, he's going to have a great economic model for his team. So Boston will have to grow into its valuation with those issues today, but Chisholm is betting that this is, one of the top 10 sports franchises in the world.
It's probably close. Let's talk about a more recent deal that you advised on, and we've been so U.S. focused, but the sale of Everton to the Friedkin Group. So soccer has really come up a lot in this specific series because you're seeing a lot of U.S. investors, I think, turn their eyes toward international soccer, either because it's easier to get in there and get a stake there, or maybe there's also just more to choose from. I mean, we've talked about with the big U.S. leagues, a very scarce asset. I mean, there's a finite number, 32 or 30, depending on the league. But a lot of people we talk to, they either have bought or would like to buy pieces of international soccer teams. What do you see going on there, and what are the draws and also the drawbacks for investors?
EPL, English Premier League, is an iconic league with great media, a wonderful structure around competitiveness and relegation, not for owners, but for fans. They've created wonderful media presence in the U.S. I mean, the level of play in the Premier League is second to none. It does become an outlet for potential investors if the big four in the U.S. are less accessible. Friedkin family, wonderful Houston-based family. We came across them through a high-quality introduction, and they asked us to help on Everton. Everton was a team that had been close to relegation. Everton was a team that was essentially sold in distress. Its prior owner had built a $1 billion stadium, this magnificent stadium in Liverpool.
But like right across from Liverpool.
Right across from Liverpool. But this one's on the water in Liverpool. So it's a beautiful stadium. The point being, the prior owner, it was a forced sale. And when the Friedkins called us and we spent time with them, I particularly spent time talking through how I was thinking about the team. All of my thought process was about M&A and distress and the sale process and what are the risks and how do we option the team secured by a stadium and how do we complete the stadium given the issues with the seller. And what was attractive to the Friedkins identifying the opportunity, was attractive to me, was the ability to buy an EPL team at a valuation far less than entry into the EPL. $500 million, where I'm going to say we bought the team at less than fair market value and got a $1 billion stadium for free. That was always my mantra because we were in and we were out because the seller, you have buyer-seller dynamics that were challenging. And that was an exercise where sometimes an advisor really demonstrates value and creates the ability to execute a deal and really adds a dimension to the family or prospective owner. This was a case where ourselves, our legal team, our UK team, UK legal team, was instrumental in creating a structure for the Friedkins to take ownership under seller duress. It's been phenomenal. So now the team is shot up. They're ahead of Tottenham. They're ahead of Man U. We have a women's team that can stay in Goodison. We're going to a $1 billion stadium next year. It's been kind of magical. Doesn't always work that way, but great client, great opportunity, good advisory, unique circumstance. Get to your second question. EPL, great league. Media, wonderful. Labor, challenging. Making teams profitable. Soccer talent is a very efficient market throughout the world. So you have to compete for talent. There's no such thing as a hard cap. There are fair play rules.
Yeah, efficient market is one way to put it. I mean,
so
for the athletes.
That's sort of the challenge in profitability, but those teams are going up in value. You also have different ownership structures. You can be a sovereign wealth fund and own it. You can be an institution and own it. You can be a family and own it. So, the rule of law in the EPL is different. And the Friedkins, to their credit, having owned Roma, were accustomed to it, comfortable with it, and ultimately willing to make that bet.
What's the most interesting team sale that you've advised on?
I would say the Philadelphia Eagles. It's my
No bias, though.
Complete bias. You know what? I'm going to say it's really, the bias is the Eagles. It was an easy deal because it had a wonderful owner, Jeff Lurie, I know from Philadelphia. I'm a fanboy, so it was completely biased advice with my client who said, Jeff, I just want to own a stake in an NFL team anywhere just because it's good for our family dynamic. They've had history in the NBA. They're a very nice family. And I looked at a couple different teams and I said, let's just do the Eagles. Trust me.
Yeah.
I said, I love Buffalo, but it's really, really cold and hard to get to in December. So that was largely an easy deal. He had a great buyer, great seller. We didn't wrangle. Seller had a demand. Buyer met the demand. And it was a relatively easy negotiation. The deal I'm probably most proud of recently is the Chargers, the LA Chargers.
Minority stake, right?
Minority stake.
Yeah.
Wonderful owner, Dean Spanos. Been his family from Alex Spanos for 40, 50 years. Division in the family with a sibling. Sibling wanted to sell her stake, hired me to sell her stake, but I wasn't hired by the team, and therefore I had to find a buyer for a 27% stake of an NFL team. Big.
Yeah, that's unusual, isn't it?
Unusual. No governance, it's minority ownership in the context of a bit of a family feud. So I was able to sort of get a standstill with the families. Everyone just, sort of let's remove headlines, litigation, and find a constructive path to get this done because it's good for all parties.
You sound like a divorce attorney.
I was a divorce attorney. And I love both sides of the family. I do. And it was probably the only way I could be successful because I was trusted by both sides of the family. Importantly, that was my role. And we had to find a needle in a haystack, 27% for $850 million. Found it in Tom Gores, who owns the Pistons. We were at the Knicks Pistons game the other night. He's a terrific owner. He lives in LA, GP of Detroit. That's another example of ownership in different leagues, GP, LP. And we found someone who got along with both sides and had a view of the NFL and its valuation and this opportunity. So that told me that it was an assignment worth taking, even if it took me a full 24 months to do it.
Wow. 2 years.
2 years.
We've been focused on deals that you advised on, and obviously you can do very well and build a great business just doing that. Let's transition a little bit to talking about your own personal investments, and maybe a fun way in is, do you have no burning desire to own a stake in a team yourself? I mean, you advise on these deals, and do you ever think, well, I'd like to have a piece of the team too?
You know what, I love, Dan, the advisory business so much that owning a team would create a conflict, so I don't want to create the conflict. I think like most of us who are passionate about sports and fandom, we all envision ourselves as being just small owners of our favorite team. But I actually see the other side of it. It's a business. It's a business that has pressures to it. It's a business that has great visibility and responsibility to it. You become the steward of a team that the community and its fans believe they own. And you know what? In part they do. So, being responsible to that constituency, team ownership is, I think, privileged and very hard. And it's extremely emotional. Think about when you go to a game as a fan, Celtics, who's your football team?
Pats.
Pats. How emotional you are as a fan. Imagine being the owner. And I had a friend who, they ended up being majority owners of the Vikings. Wolf family, wonderful family. And they grew up Giants fans. Ziggy and Mark. Terrific people and great owners and wonderful philanthropists. And Mark tells the story that they were walking out of a Giants game and they had just lost and they were all kind of crying, and the dad said, "Look, boys, it could be worse. We could own the team." And it kind of struck me. It's like team ownership is a responsibility, and it is extremely emotional and challenging. And yes, I would love the privilege of it, but it's a responsibility. I know fans don't always see it, but I see both sides.
Not to mention the media scrutiny.
Media scrutiny is tough. Dave Tepper lived as one of the great financial investors of all time, as he continues to be. And he was noteworthy and on CNBC and on the cover of business publications. But once you own an NFL team, a whole different thing. Walk around the streets, could be good, could be a high five, could be not a high five. So challenging.
Being so tight with him, how do you think and how does he feel that the ownership has gone so far? Tepper and the Panthers.
I think
he had some settling in to do.
I think every owner has some settling in, and I think he's made great changes that, initially the changes you make, they take some time, and sometimes you have to readjust those changes. All owners do. And the team's in good position, and the business is in good position. He's got to deal with Charlotte to renovate the stadium. I mean, it's a great downtown stadium, so he's putting money into that. He brought MLS to Charlotte. That was uniquely him because he had the passion for it. It was about the Charlotte fans. He had the balance sheet to do it. And he is a major philanthropist in North and South Carolina. So I think he's done great. Fans will measure wins and losses. He'll get that too.
Yes, they do. Yes. You mentioned earlier Everton, the women's club, and you just mentioned MLS. Women's sports writ large, but then especially lately, like NWSL, WNBA has also been a very hot investment area. I mean, do you have people approaching you? Mostly we've talked about the big 3 or 4 U.S. men's leagues, but are you hearing more from people that would like to buy one of these women's teams?
Completely. NWSL, now $100 million franchises, bought and controlled by institutions like Sixth Street. Avenue and Mark Lasry are invested in a team. WNBA, very attractive franchises. Women's sports broadly gaining attention. It's not just Caitlin Clark, but a lot of credit to her, but sort of the legacy greats in women's sports. So I think it's been great. Flag football now, coming out of the NFL, will start with women. There's a lot of interest in that. That will be an investment opportunity. So I think women's sports, as a secular national, international trend is on a really steep curve. I think the business models of these teams will have to catch up with the enthusiasm, because just being an NWSL team doesn't entitle you to be profitable, or there's time that will come with really what you need for big profitability in sports is to turn on the media. And the women's sports are getting a lot of media attention, but they need ultimately these big national media deals to carry all the teams in the entire league, and we'll see that.
Couple more for you on Andalusian and the other parts of the business, as I alluded to. So there's a credit and lending business.
Yes.
You have an involvement in sports there. And then also there's late-stage growth investing that you guys do, including into tech. Talk to us a little bit about all that.
We follow our leader. Dave Tepper is just an investor. He's not involved in the business. But Dave, when he does his investing, aspires to higher growth, higher return. So our private investing is largely late stage somewhat larger growth companies. We don't do venture. And we've successfully invested in businesses, one of which will be public hopefully this month, called eToro. It's a little trading platform. They're a big sponsor of EPL. They're all over. They're based in Tel Aviv. Crypto, great business. I took the founder to the Knicks game the other night with his 5 children. Great business. We invested in that a number of years ago. We invested in a mobile gaming business. We invested recently in a private aviation business. We invested in the Epic Games business. So we find businesses that are evolved, that have a good financial model, that are sizable, that have a reasonable path to an IPO or exit. So like Dave, we like to see not just the beginning of investments, but a successful investment is at the end when you've concluded and monetized. And usually we do that through IPOs, or it could be a strategic sale. So it's a fun business.
You mentioned gaming. I'm almost surprised betting hasn't really come up yet in this chat. I mean, talk to some people about the rise in sports valuations, and you pointed right to media. Many also say, well, legal sports betting, although I think it really depends on what market you're talking about. But what do you make of betting and its impact on sports as an asset class?
It's great for fan engagement. It's great for the businesses that have the scale to navigate through state regulations. So FanDuel, DraftKings, like, credit to them. Fantasy sports businesses.
Took a long time.
They got the nod. Started in New Jersey, and those are very evolved businesses that still have challenging, financial models, like cost of acquisition, competition. Michael Rubin's doing a great job with Fanatics, building out his sports betting business. So it's competitive. It's highly regulated. Ultimately, they're great promotion partners for the teams and leagues.
I was just about to say, spending a lot on advertising.
So, there was a move a few years back for commissioners to say, okay, maybe we can participate in sports betting in the business model directly. And then I think there was a step away from that. I think there are not necessarily clear economics to share, and recognize the power of those businesses as promotion partners, as fan engagement partners, and they've filled that role perfectly.
Jeffrey, let's end on this. Putting you on the spot here, best investing advice, what you've learned in all your years doing this.
I'd say particularly in this market, it's very apt. There are times to make money and times not to lose money. We're in a market where the latter matters.
Just hold on.
Hold on.
Got it. All right, Jeff, thanks so much.
Thanks, Dan.
Appreciate it.